NVIDIA, buy. Here's the deal when it comes to NVIDIA, okay? Last night, Elon Musk, one of the richest people in the world, or you actually might still be the richest person in the world, right? Or somewhere up there. One of the most powerful people in the world. He's talking up NVIDIA left and right? Talking about 35,000 H100 chips. He's hoping to get to 85,000 by the end of the year. It doesn't look like Tesla's going to stop spending with NVIDIA chips anytime soon, just to be quite frank. That could be years. He's talking about they're trying to use them as efficiently as possible. And then tonight, Zuckerberg on the conference call, right? He talks about years of big infrastructure spend for AI. If you're talking about infrastructure spend years ahead, it all circles back to one company. And that company is NVIDIA. This means that Meta is going to be spending even more money than they thought they were going to at the end of the day, they're buying NVIDIA chips. And so when you think about this just practically, NVIDIA is just very well positioned for the next several years. Years, not months, years, not quarters, years. Because Meta is going to be spending like a drunken sailor for years to go in the future on this. Tesla's going to. You think Amazon's not? Of course Amazon's going to, right? You know Google McDougal's going to. You know Microsoft's going to, with obviously what they're doing with OpenAI. I mean, OpenAI, Sam Altman, he wants to build chip factories, and he knows how much NVIDIA is going to make off this situation. Oracle, all these companies, right? All these companies want to get their hands on as many NVIDIA chips as possible. So it all circles back to NVIDIA in this several-year bull cycle for NVIDIA. And the best thing about NVIDIA is it's not like that stock's trading at a rich valuation. It's not like it's at some crazy 150 forward P. If that was a situation, you might say, ooh, okay. No. It's trading at in the 30s right now. So that, to me, was everything. Because the overall worry about NVIDIA is, well, things are great right now, but maybe business slows. All these big dog customers have no choice but to continue to buy these NVIDIA chips. You can't get them anywhere else. That's just the bottom line with that, okay? Alrighty, so let's get into my thoughts on Google and Microsoft before we get into the other subjects. So Google McDougal, if you look at that income statement, it was a grade A income statement, very impressive. Revenues, 80 billion plus, 69 billion in the same quarter last year. Cost of revenues went up quite a bit, but I mean, if your revenues are going up that much, it's still very, very impressive. Research and development was up slightly for the company year over year, but only 500 mil. When your revenues are up over 10 billion and your R&D is only up 500 mil, that's pretty impressive for a tech company. Sales and marketing actually fell for the company year over year. That's incredible. General and administrative was down about $700 million year over year. So let's get this right, okay? If your revenue is up that substantially and many of your expense line items are down, guess what your profitability is going to do? It's going to go to the moon, right? And that's exactly what we have seen play out here at Google McDougal. Income from operations over $25 billion versus $17 billion. Net income, $23.6 billion versus $15 billion. And if you look at EPS, $1.91 versus $1.18. Incredible, right? If we look at the balance sheet, top 5 balance sheet in the world in regards to Google, absolutely incredible, right? And that just, they've had a top 5 balance sheet in the world for probably 10, 15 years now at this point in time. Now, on top of that, they also announced their first ever dividend. It's kind of funny because Meta announced the dividend last quarter. Their stock goes crazy. It was up like 20%, right, the next day. And then Google watches all that play out. And they're like, man, our stock's been a little stagnant, especially if you compare it to Meta over the last couple of years. We're like, we need to get this thing moving. They announced a dividend. They also, if I recall, they have a big share buyback as well. Now, Mr. Softy, phenomenal earnings, another grade A here. Product revenue about $1.5 billion year over year. Services revenue $44.7 billion versus $37 billion in the same quarter last year. Total revenue $61 billion versus $52. Cost of revenue, they kept all that in check. Gross margin dollars went to $43.3 billion from $36.7. R&D was up for the company, sales and marketing was up for the company, G&A was up for the company, but everything was kept very in line, which is what you would expect from Satya Nadella. He does a heck of a job running this company. Net income went to almost $22 billion from $18.2 in the same quarter last year. $2.95 EPS versus $2.46. That's a grade A income statement right there. Now, in regards to Microsoft, the guide came in a little light, just like Meta's did, right? They called for $64 billion in revenue for this next quarter. Analysts were at like 64.5, so slight miss, about a $500 million off, which was basically right exactly what Meta kind of got it for. Their midpoint, they're about $500 million off of the street as well. Now, they also say currently, near-term AI demand is a bit higher than our available capacity. Very, very bullish, okay? Microsoft has been increasing its capital expenditures to secure NVIDIA's graphic processing units for training and running artificial intelligence models. So that leads us into our second thing here, right? Which is this very, very bullish stock, and I talked about it yesterday. It is NVIDIA. So now at this point in time, we've had Tesla, Meta, Google, Microsoft, all basically saying we've got to spend on AI, right? And so any thought process that was out there about maybe the AI spend's going to slow down, maybe these companies are going to cut CapEx or something, there's 0% signs of that right now. A year from now, it could be different. 3 years from now, it could be different. 5 years from now, it could be different. But as of today, there's zero, like Robert De Niro, zero signs that companies are cutting. They're spending as much as they can on NVIDIA chips, and it's going to be like that for quite some time, folks. And I believe NVIDIA just gave their first H200 to guess who? OpenAI. And so all these companies are just loading up on H100s right now, but at this time next year, they're all likely going to be loading up on H200s. And if you don't buy those H200s, you're going to fall behind your competitors. So it's an arms race. It's an arms race at the end of the day, and all the big tech companies out there are all involved in this, and the smaller tech companies as well. Now, if you're wondering who's the best buy out of Meta, Google, Microsoft, I mean, just factually, statistically, it's by far and away Meta, right? Google, great company. Microsoft, great company. But if you got to pick one, you got to pick Meta. Meta's got the cheaper forward P of the stocks. They're, I would say, arguably the most diversified of all those business models. And the third component, right, is this company's growing at a much more rapid clip than Google and Microsoft. If you look at Google's numbers, if you look at Microsoft's numbers, both those companies are growing less than 20% their top line. Meta just came off a quarter where they grew that top line 27%. So much stronger growth. Then we could obviously go into Meta's founder-led. Zuckerberg still leading that company. And, no disrespect to Sundar Pichai or Satya Nadella, but there's only one Zuckerberg, right? And so, at the end of the day, you compare those companies together, and it's Meta's the best buy of the three still at this point in time, right? Now, for the next, which stock does better for the next 3 weeks or 3 days? Who knows? It might be Google or Microsoft, but I'm thinking about the next 3 years, and there's no question Meta's the most well-positioned. And that stock's done by far and away the best over the past 18 months out of these three, right? I don't see any reason why over the next 18 months it won't do the best as well, right? By the way, 1000xstocks.com, we just had our 290th person join the wait list. If you want to get in that first 300, you can go to 1000xstocks.com to get on the wait list there, okay? Next up here, let's talk about Apple's risk for next week, and then we'll get into, is Amazon looking very bullish going into next week, okay? So here's the deal, okay? If we think about the Mag 7, all the Mag 7 stocks except one is respected for AI, right? Google is, Microsoft is, NVIDIA is, Amazon is, Tesla is, and Meta is. One company is not respected for AI, and that company is Apple. Now, this is the quarter where Apple is expected to likely talk about how they're going to spend for AI. Now, if you think about Apple's shareholder base nowadays is really focused on profits, earnings per share. It's a lot of the Warren Buffett type folks, right? They're not buying Apple stock for major growth. They're not thinking about how does this company grow revenues 20% next year, 30%. They're thinking about it as Coca-Cola, as Pepsi stock. As, somebody drops their iPhone, they go buy another iPhone. Somebody needs a new iPad or wants a new iPad, they go buy another iPad, right? It's not like I'm going to go buy some other product. So they think about it in terms of this ecosystem. People like it. People continue to use it. It's stable. It's dividends. It's share buybacks. It's profits. But the problem is we're now going into a cycle where you're going to have to spend aggressively. And this is where it leads into a very confusing time for Apple. So let's say Apple announces, you know what? We're going to start taking this AI stuff really serious. We're going to start spending. heavily on AI. All right. If you're going to hire people, right, a bunch of new people to work on AI systems and experts on this, those people are going to be very expensive, and those people will hurt your earnings per share, right? There's a big cost associated with that on your income statement. Now, on top of that, it could also hurt your cash balance, because if you're going to spend a bunch of money that you wouldn't have traditionally spent on CapEx for infrastructure, so let's say Apple's going to spend an extra $10 billion in infrastructure this year, which, by the way, that's not even a big number for CapEx. $10 billion is not actually going to get you as many chips as you think it's going to get you from NVIDIA and all the other systems you need, okay? So, but let's just say, hypothetically, Apple's going to spend another $10 billion on CapEx than they would have if it wasn't for AI. Well, that means less money for then share buybacks and for dividends, because there's only so much money to go around, and especially for Apple right now, because Apple's having trouble growing their top line, and Apple's kind of been running their business very lean, so it's not like they have a lot of employees they can cut because they've been running their business so lean already. So they're stuck in a real pickle here. Now, let's say they don't. Let's say they don't spend, okay? They don't announce any big spend on AI. Well, if they don't have some sort of big up on their AI spend, then people can look at that and be like, Apple's not taking AI serious like all the other Mag 7 stocks. They're going to stick themselves as being the loser in this space, right? Which is not going to be very comforting for a lot of the long-term investors. Now, does Warren Buffett care if Apple's a leader in AI or if they're irrelevant in AI? I don't think Warren Buffett cares. But I can tell you there's a lot of other people that do care. And we'll look at Apple and say, if you're not spending, like, what are you going to spend on? Because this is just kind of another loss for the company, right? We know Apple Car has failed. They've exited that product. From what we hear, the Vision Pro product is failing. If you guys have seen the news in the last few days, they're cutting down their shipments massively. From what I heard, it's like 50%. It's awful. I did tell you guys that was coming, right? I told you guys when that product was released, they totally got that wrong. Apple should hire me because I'm like, well, they screwed up so bad in regards to that. I'm still like, my gosh, like the price point, they messed it up across the board. I don't even feel like getting into that right now, right? I called that out months ago. But they're in a no-win situation because whichever way they go, they're going to be looked at as, this is bad. You want to spend a ton? Okay. Buybacks, dividends hurt. Maybe your earnings per share is hurt if you got to hire a bunch of people as well. You don't spend, you're an irrelevant big tech company. And people are going to look at you like, what are you up to, man? You're not doing anything. So I don't know how Tim Cook's going to handle this situation. I'll just be honest with you. I wouldn't want to be in his shoes. They lagged on this big time, and now everybody's looking at them, and they're going to be like, what are we doing here with AI? No bueno, no bueno. So what does that mean for Apple stock? I don't know. We'll see. But I don't think it means good things. I don't think it means good things. All right, next up here, or is Amazon looking very bullish? So first off, in regards to me with Amazon, I'm going into this earnings with 1,055 shares in the public account, assuming I don't buy any between now and Tuesday. So it's a pretty big position for me overall. So you got to think about Amazon in regards to three core businesses. You got to think about them in regards to e-commerce. You got to think about them when it comes to cloud, AWS. They're the big dog there. So the big dog in e-commerce is the big dog in AWS, and then they're a big dog in advertising, but they're not the big dog, right? That always goes to Meta and Google. They're always recognized as the big dogs in advertising. So the question is, do we have any tells on if these businesses are likely going to have performed great or not? Well, we do. We have tells on all segments, actually, based upon other companies' earnings, so we can kind of figure out, is Amazon going to likely come in with a really strong earnings? So if we think about the advertising business, right, it's going to likely come in stronger than expected. Based upon Meta's growth rate of 27%, based upon Google's growth rate, which looked very, very strong, it looks like the advertising business for Amazon should be very, very good for this particular quarter we're going to go into. Now, keep in mind, in this quarter, there's no football season in that particular quarter, right? That actually matters for Amazon because in football season, they have Thursday Night Football. So they don't have that right now, but at the end of the day, advertising business should be very, very good. But what about big dog, AWS, right? This is the profit machine. This is a cash flow machine, AWS. Well, if we think about AWS, if you look at it's AWS, then it's Microsoft, right? And then down below that, it's Google. If we look at Microsoft's cloud business, if I recall, the numbers were up 30% plus. So Azure looks very, very strong. Google Cloud also looks strong. So my guess is AWS should look very, very strong as well, because I do not believe Microsoft and Google are necessarily stealing customers away from AWS. I believe all these companies went through a period of cutback from some of their customers, and AWS is the biggest, so they got hit the hardest. When companies went to cut back on spend in 2022 and into 2023, AWS got hit by far and away the biggest, because they are the biggest. So if you're the biggest and customers are trying to figure out how to save money, you're going to get hit the hardest, right? And so AWS got hit the hardest. So as growth accelerates again, right, which it should in 2024, and Andy Jassy kind of already bottom called, in my opinion, what the cloud business, the biggest beneficiary on a dollar amount basis should be Amazon. That doesn't mean they're going to have the highest growth rate from their cloud business, but the biggest dollar amount should by far and away be Amazon. So don't be surprised if AWS posts the best growth we've seen in many years. Just to be quite frank, maybe the best growth we've seen since 2021 in regards to the cloud business. So that's looking really good. So we got two big businesses that look really good. But what about the e-commerce business? Well, you've always kind of been able to tell if the e-commerce business is healthy based upon Meta's revenue specific. I've never really seen it where if Meta revenues are bad, Amazon's e-commerce business is good, or vice versa, where Meta's e-commerce business or Meta's business is good and then Amazon's e-commerce business is bad. Generally speaking, if Meta's advertising business looks great, then Amazon's e-commerce business looks great. And a lot of people that are actually Amazon sellers can run ads to Facebook, Instagram, these different products. So being that Amazon just came off a quarter of 27% revenue growth, right? I believe that there's a high probability the e-commerce business for Amazon is doing tremendously well. And I think that growth rate could actually surprise us well. So here we are in a situation with Amazon where they're probably going to beat expectations on the e-commerce business. If I had to put odds on, I'd say probably 90% probability on all three of those. Probably a 90% probability they're going to be on e-commerce. Probably a 90% probability they'll beat on AWS, and probably a 90% probability they beat on advertising spend. So that all bodes very, very well for Amazon. And so what you should likely see is significant beats when it comes to revenue and when it comes to earnings per share. And you should also see incredible growth on a year-over-year basis. You could see some of the fastest growth in these businesses for Amazon that you've seen, honestly, since probably 2021, which is going to be very, very exciting because Amazon's growth rates had been a little sleepy the last couple of years now at this point in time. Okay, so I'm looking very forward to Amazon's earnings on Tuesday. And you might say, well, what about the risk of this being like a Meta type situation here, right? And sure, that's a risk of like, what if they report good numbers just like Meta did and the stock still goes down? It's certainly a risk, but Amazon hasn't really been a hot stock. If Amazon is like at the same price it was back in like 2021. It's not like a Meta that had ran huge and was up like 400 or 500% in a matter of 18 months. Amazon stock kind of hasn't done anything for really years at this point in time in terms of, if you look back since 2021. So it's not like it's necessarily a hot stock riding into these earnings. But if they come through with great numbers and great guidance, good conference call, the stock's positioned to go well over 200 for the first time ever. And who knows, maybe approach a 225 number very quickly in regards to that. So we'll see how it all shakes out. But based upon all these other tells, I think Amazon's looking pretty dang good. Now, next thing I want to talk to you guys about is all these earnings are coming out left and right? Metas and the Googles, and we're going to have Amazon, we're going to have Apple coming, right? Microsoft, Palantir is going to be coming, Shopify, all these companies. It's very exciting, right? And there's a lot of action and there's a lot of things to talk about. And I love earnings time period because there's so much going on. It's like action-packed, it's fun. But the one thing I'll say to you guys is stay focused during this time period, because this sort of time period we're going through right now, earnings season, right? You can get very distracted by short-term stuff that's going on in businesses and get very short-term focused on, oh, this business is so great, this business is so bad. You can be influenced to sell stocks if the companies aren't reporting good earnings in the short term, or if this company's hot, you might be, more inclined to buy it. Don't let any of the short-term stuff cloud long-term visions in regards to stocks, long-term investments, okay? businesses go through ups and down cycles, and one time a business is like, the hottest thing since sliced bread. The next minute, no one wants a piece of that business. And it's up for you as an investor to kind of like just take a step back sometimes, and just say, what are the trends over the past year? What are the likely trends over the next year? And ask questions like that, find out things like that, research things like that, not just focus on what's the hot thing in that particular quarter, because it's very easy to get wrapped up in it. You think about Tesla, right? Tesla, 3 years ago, the hottest stock in the market. Everybody wants a piece of Tesla, right? And then you fast forward to going into this earnings time period, and you would have thought it was the worst stock in the history of mankind, the way people were destroying that stock, right? And the way people were talking about it. It's got to crash another 50+%, all these sorts of things. And during that short-term time period, there's so much negativity, it can lead you to kind of like get into the short-term mindset about, what I'm seeing today is what you're seeing today is not the only thing you're going to see. This is something you got to keep in mind. Like I said with Tesla, 3 years ago, if a lot of people could see was growth, and it's going to be a $10 trillion company, what I could see was problems coming over the coming years, right? And that's why I exited the majority of my position. Now, I see a lot of opportunities over the coming years, right? So you got to differentiate between what's going on for the next 3 months with the business versus what's going on for the next 3 years for a business, right? And if I look at a Tesla, I think the next 3 years are incredibly exciting for Tesla. If I thought about the last 3 years, I thought it was going to be a tough 3-year span, and we had a very tough 3-year span, right? And so these are just some kind of food for thought, guys, in regards to this. Don't get caught up in the short-term numbers. It's important you look at it. It's important you pay attention to what's going on with these companies, but don't think what you see today is what's going to happen forever. I can tell you, if we had a major recession, these companies wouldn't be putting up this sort of growth. If we have a major recession, all these big techs will likely cut back on AI spend, which would hurt NVIDIA, right? That could change numbers. We don't have that right now, but if we ever did, there's just a little food for thought there, right? We saw what happened to these companies' growth rates in 2022. When the Fed started raising, my gosh, they got cut heavily. And so that's just a little food for thought there, guys.